Hey everyone, it's Tim Royster here. It has been a jam-packed week of housing and interest rate news, and what I wanted to do today was just dive right in and talk about interest rates as well as the conforming loan limits that went up. And I can't think of a better person to talk about these kind of things with is Patrick Holland with Embrace Loans. So make sure you listen to this one.
I feel like it's almost every day we have something that is impacting interest rates, the housing market locally as well as around the nation. But we're here to just deep dive into what some of these things that we've heard this week and how they've impacted interest rates. And I also want to talk about this 2023 conforming loan limits and what that means for buyers. So Pat, tell us what's going on right now.
Well, you've got that right. I mean, this week we're kind of scratching our heads just a little bit because there's I guess just the big word is volatility. And sometimes volatility can be good. Sometimes it can be a little scary. And this past week, we're starting to see indications that all of the work that the Fed has been doing over the past several quarters to battle inflation may be starting to take effect. Some of the data points that came out this week with the core inflation numbers showed that, again, a little bit of a decline with the rollover, the 12-month rollover numbers, as well as the indications back, from November. So that, are we seeing it plateau? Are we going to see it start to come down a little bit? All of these things are starting to take hold. So that helps consumer confidence a little bit. So we saw this past week that interest rates did continue to fall. Mortgage applications were actually up this week, which is a signal of consumer confidence, whether it's for refinances, which were for the first time in a long time up a little bit, but then also mortgage applications for home purchasing. There is a lot of pent-up demand on the sidelines, because as interest rates started to rise and continued to climb, individuals still wanted to buy, but their buying power started to go down a little bit as interest rates, continued to rise. And then yesterday, the job numbers came out better than expected. So we actually saw interest rates climb a little bit in the morning because the markets didn't know how to perceive it from a bond or an interest rate perspective. But then by the end of the day, we had a reprice for the better. So we saw interest rates actually come back down a little bit yesterday and stabilize. So it's almost like you have to be watching this all day long and try to keep your clients up to date with the movement of the markets. But all in all, it has helped home buyers with a little bit of savings on their home purchases over the past 2-3 weeks.
Let's talk about that. So over a month, I know we were looking at these averages like around just over 7%, right?
Yep.
A month ago. And now we're in the low sixes. So
yeah, it's incredible.
So tell me, what does that savings look like? I mean, when we just crunch some numbers.
Yeah, and we were just looking at a scenario for a client that we're working on, and so on that one, and we'll just use some easy numbers, but on a $500,000 loan, the savings from last month to this month is like $312 or $320, somewhere in that area. And then so that can be one of things. An individual can either maybe possibly increase their buying power a little bit. And so instead of, just going after, okay, now I can buy this house, or wait a second, if I was approved at that higher number, maybe I can go out and look at, and maybe we can stretch that budget just a little bit because we didn't find exactly the right house at that lower price point. Mm-hmm. So it's however you want to look at it, it has helped the consumer, with either monthly savings or increased buying power.
I think we're noticing that difference also with the clients we're talking to. We're seeing more activity just online, and even conversations, and even with listings, showings. I was out there yesterday at 9 o'clock, brand new listing came in the market, and there was 2 of us out looking at the house, just came on, right? So that's interesting. And in one of our listings, the activity picked up starting Wednesday. That's interesting too, right? And we have appointments through the weekend. Something else happened this week, and this happens every year.
Yep.
And it could stay the same or it could go up. And we found out the 2023 conforming loan limits increased by like just over 12%.
It was incredible. There was a lot of debate on the stability of the housing market through this major increase of interest rates, but it's a kind of a rollover number as well. And you know, there's no perfect science. I don't, you know, I'm not in the boardroom or when the statisticians are looking at the data, but the FHFA, they take a look at the average home price from the previous year. I'm sure that has a big impact on that. And then they start to increase that number. You know, not too long ago, the national conforming limit, whether you were buying a home in Alabama, Virginia Beach, Virginia, Alexandria, Virginia, the national conforming loan limit was 417,000. It's amazing how in just a few short years, we are almost now double that number. The new national limit that we are allowed to, you know, lend on a conforming limit is $726,200. So now FHA and VA has not announced their numbers just yet, but that is going to happen. Typically, they follow right behind, you know, in the weeks of or within 30 days. And we've already started locking loans in using these new limits. And that is another tremendous saving. So a perfect example, Tim, we're working on a client that is right around that 700 to 725 range that was going to be putting 5% down. They were in a high balance conforming loan limit. Even with the interest rate driving, there's about a 1/4 point difference in rate or a slightly higher fee. Well, that 1/4 point on a $700,000 loan amount is $100 a month. Now, that's somebody's cable bill or heat bill. I mean, so this all goes to assist the home buyer with their monthly budget. So it's incredible now that there are these slightly other opportunities. So we are starting to see that pent up demand. You know, over the last 3 days, we have gotten my office alone. Okay, we have 12, 13 loan officers in my office. We're all starting to get a little giddy because our phones are ringing and these people are updating their pre-approval letters. And hey, look, we're going out this weekend with our agent. There's a couple houses in the market. They're more in our price range now. You know, they're excited. So I'm hoping that this is just another great holiday miracle, if you will, that we've got some good activity in the housing market.
Yeah, I'll kind of finish with this. I was just looking at Mortgage News Daily yesterday, and they called it, this is from one of the quotes, it says, rates dream of a green Christmas. So green Christmas, obviously green for interest rates they're in the positive territory, right?
Absolutely.
I think this is all good. It's not just good for the consumer, it's also good for sellers. Sellers are able to realize that this is going to help bring the buyers back in where that buyer pool may have been smaller, is now opening it up so more people become attracted to your home. So we can talk all about that more, and that's actually a very good thing to be tracking. So interest rates, dynamics of the macroeconomics, micro, local economics, and what that means for buyers and sellers is important. And Pat, thank you. And we'll do this again because things keep changing every day.
Yeah, we might be doing this in 3 hours. Who knows? Let's keep people informed.
Appreciate it, Pat. All right, you take care.